Welcome back. Jitendra Gohil is Chief Investment Strategist at Kotak Alternate Asset Managers. Jitendra, good to have you with us here. Good afternoon. Markets taking a bit of a pull, combination, just profit booking, I guess, right? 12-13% quickly. But where does that leave you and what you're doing at Kotak Alternate? Give us a sense of what you're liking, what you're not liking. Where do you think there are still opportunities in?
Hey, hi. Just few things before we jump into what we like. What we are, seeing in the market is there's a big reset going on. So if I look at the U.S. market, which is the largest consumer in the world, and China, which is the largest producer in the world, now they both are having this trade tussle, and we don't know where the equilibrium will be. But it seems that both countries are facing several challenges domestically as well. One on the debt side, other will be on the consumption slowdown side. So I think there is a big reset going on, and this is actually good for the global because too much concentration in this couple of countries might not bode well for other countries. So I think in that perspective, I think this near term shift in this global trade, probably it will have a long-term impact on a country like India, and we think that that would be on a positive side. Now, on the what we like and how we are looking at this whole thing is that look, there was too much focus on U.S. markets, U.S. exceptionalism. Almost 71% of global MSCI market cap was concentrated in US. And since now the dollar has started to weaken at that time when there was a risk-off environment, gold price there shot up. So it seems that the risk premium is getting adjusted. So we are applying little less or lower risk premium for emerging market, and that is possible, and that is very clearly visible that we have seen FPIs have started to come back to India to some extent. Our yields have remained well anchored despite US yields have shot up sharply. So from a macro perspective, I think we are in a very decent space, which gives us a lot of comfort. Now, in this kind of a setup, what we are, suggesting our investor is first that because of India's macro stability, the way rupee has behaved, pretty much stable year to date. We saw some kind of volatility, but overall it's pretty stable. Yields are stable in this kind of environment. Banks tends to do better. Our inflation is well under control. RBI has also started to ease a bit, and there's a possibility of a 50 basis rate cut as per our house view. And if we are a little dovish, if the growth slows down globally as well as a little bit locally, then that 50 basis point could be 75 or even 100 basis point rate cut this year, which is fantastic for some of the NBFCs and banks. So we think that while these trade tensions lead to a lot of uncertainty from the medium to long term perspective, I think India's macro stability gives us a lot of confidence. And that leads to focus on some of the domestic names, especially banks. On the other hand, if I look at the global setup, so even Europe, for example, has now started to spend. So Germany has lifted its debt ceiling, and I think we will see a lot of spending happening outside US. So while US might be controlling its spending, the other economies might want to again support their economy. For example, even China has started to cut rates, and they started to stimulate. Europe probably might have to do it. India has a little bit headroom, more headroom on the monetary and less headroom on the fiscal side, but still we have good headroom to stimulate in case that we see growth slows down. So net, while we remain little, skeptical about what is happening in the near term, but let's say if we fall another 5-7%, again you will see the buying interest might come in. However, on the other hand, if I look at the concerns that we have, while we are little positive on
So,
the
Jitendra, allow me to come in. We have limited time. So, you like banks, right? That's the
yes.
right. So, to the exclusion of pretty much everything else, I'm understanding. Very few things you like at these prices.
So yeah, I'm coming to that. So banks and NBFCs probably are in a better position, and also we are bearish on oil. So if oil starts to fall, probably you will see that our macro improvement starts to factor in, and that leads to some kind of bounce back in even PSUs as well. So we think that banks are better positioned. And from a tactical perspective, if we see that oil starts to fall again back to, let's say, 60, we might see some more rally in the PSUs as well. Other sectors that we like probably would be healthcare, where we are positive on hospital stocks, while the global pharma companies we have turned neutral recently, but we think that there are CDMO space where we have started to become more constructive as of now.
Okay, Jitendra, thank you very much for that. Sorry, shorter conversation because we have earnings lined up as well. We'll pick up on some of these points in greater detail, next time around. Ramdev Agarwal is with us, Chairman and co